Welcome to this edition of CBM Money Tips, brought to you by Lance Cook, President of Canada's Best Mortgage. Today I'm going to share with you 6 strategies to save money on your mortgage. Now that we have the lowest interest rates in history, you may be thinking, is it time for me to refinance my mortgage? As there are so many different mortgage scenarios out there, I find it easier to answer this question by breaking it down to 6 different strategies. If your mortgage is similar to one of these strategies, then I welcome you to contact us at CBM and we'll look at your specific mortgage details and explain your options to you. Strategy number 1, refinance your fixed rate mortgage to a lower fixed rate. Lowering your interest rate by even a small amount can save you thousands of dollars in extra interest over the term of your mortgage. For example, for every 1/4% you lower your rate by, you will save $13.64 a month and $1,193 over a 5-year term. And that is on every $100,000 of mortgage funds you have. So if you have a $300,000 mortgage, you'll save $3,571. And if you reduce your rate by just 0.5%, the savings is $7,169 on a $300,000 mortgage over 5 years. If your current interest rate is higher than our rates on our website, call us and we can calculate the savings and your early renewal penalty. If the savings is larger than your penalty, we can save you money by switching your mortgage. Strategy number 2. Are you paying too much for your variable rate mortgage? Although the variable rate and adjustable rate mortgages are tied to the prime rate, the relationship to the prime has been moving significantly up and down. Many people carry variable rate mortgage with a rate tied to prime that is higher than the current variable rate mortgages. Check our rates to see if you're paying too much. For every $100,000 in balance over a 5-year term, you'll save $500 for every 0.1% we lower your rate by. And the early renewal penalties on most variable rate mortgages are only 3 months interest, so switching and saving is easier. Strategy number 3. Are you paying too much for your home equity line of credit? There are no penalties to pay out a HELOC. Many people carry HELOCs with rates tied to prime that are higher than we can get them for. Check out our HELOC rates and see if you're paying too much. For every $100,000 in balance you carry over a 5-year term, you will save $2,500 for every 0.25% we lower your rate by. Strategy number 4. Are you using the wrong loan product? The banks sell their home equity line to credit because it's more profitable than a variable rate mortgage. If you carry a large balance on your HELOC and will not be paying it out for 6 months, we could replace it with a variable rate mortgage and save you over 1% on your rate. For every $100,000 in balance you carry over a 5-year term, you'll save $5,000. Strategy number 5. Do you have any high interest rate loans or credit cards? By consolidating your high interest rate loans and credit cards to a lower rate, we can save you a lot of money. Carrying large balances on your credit cards or lines of credits not only costs you a lot of money and extra interest, but it can damage your credit score as well. Let's look at an example. For every $10,000 you reduce from 8% down to 3%, you save $2,500 over 5 years. If you carry credit card debt at say 15% and reduce it down to 3%, you save $7,500 in interest. And if you apply those savings to your mortgage, you save even more. If you're carrying any debt over $10,000, call us and we'll crunch the numbers with you and show you how to save your money. Strategy number 6. Can you make your interest on your mortgage tax deductible? CRA rules state that when you borrow money to use it for an investment, you can write off the interest against your income. It doesn't matter to CRA what you use to secure the loan. It can be your principal home, a rental home, a vacation home, or any asset. If you have any investments except RRSPs, you can cash them in, pay down your mortgage, refinance your home to access the equity, and buy back more investments, and your interest is now tax deductible. Also, if you have any rental properties, we can set up your mortgages so that you get the best tax benefits possible. So the answer to the question, should I refinance my mortgage, is to complete this 3-step process. Step 1, CBM will do a needs analysis of your current situation. Step 2, CBM will build a mortgage strategy that meets your needs. And Step 3, CBM will shop the market for the best rates and terms that meet your strategy. As your mortgage advisors, my team can help you sort through the confusion by helping you through these 3 steps. For more information, call Brad Spennel today at 1-877-593-7738 or email brad@cbmteam.com. I hope you found this episode of CBM Money Tips helpful. Feel free to pass this on to anyone you know who might want to save money on their mortgage. Thanks and have a great day.